Hey, good morning, guys. Ken at Tortoise Capital, Sunday morning coaching for May 17th, 2026. Good to see everybody. My quick check-in. Finished our last youth soccer match yesterday, so I have a little bit of a break from soccer until summer camp starts up in June. I do those in the early mornings because it's starting to get hot already. Um, the military college semester is coming to an end, so all of the applied AI projects that my guys are doing for my elective are coming in. Very, very impressed with the work they did. That keeps me young, gives me a lot of good ideas. They did some amazing work with AI, just proof of principle. The single most important thing was that they all adopted the point of view that they were the commander and the AI was the staff, and it helped them all the way through their projects. And that's the number one thing that I teach them, and they seem to have gotten the message pretty well. So pretty happy with all the work they did, and a lot of things that are going to go out and help the Army do good things. So it's here to stay, and use it properly. That'd be uh, my point. And that's everything I got from here. And Luis, good to see you. Give me a quick check in. How you doing?
So maybe me. I'm doing very well, thank you.
Yeah,
Same, same as last week. So last month, actually, since I started, I'm quite okay.
yeah,
Uh, Working on my progress on plan preparation phase. So not rushing up. Basically, I found it like quite important, these two phases before trading and reversal. So I sticking with this, reviewing some old videos regarding these two phases, how to select the symbols, watching training with Yuken,
yeah.
what done this week. So quite a lot, but generally everything's fine. So I hopefully soon will generate stable 30 trade samples so we can assess few.
Yep,
Okay,
sounds good.
that's it.
Luis, how are we doing?
Hey, good morning, guys. Doing good, doing good. Watching the market do its shenanigans last 3 weeks, breaking all kinds of records. And then Friday, seeing the rates explode higher across the world, which is really interesting how markets are going to respond. And then very curious about uh, uh, President President Trump's disclosed trades for the first quarter, how that is just amazing what's happening. But anyway, everything good here in Austin, Texas. I hope.
Cool. And Alex, how we doing?
Okay. Good good morning. I'm doing sorry, let me just change the lighting. All right. I hope that's better.
Yeah,
Sorry. I'm doing okay health-wise. But I did the review of my like weekly review of their accounts, and that got me very upset yesterday because in their like Friday. All my accounts lost. So, my gold account lost, my crypto account lost, my trading account lost, my conservative account lost, and it's like, I'm down about 5% for a week, even though their S&P, eked up a little bit profit for a week. So, that got, I would say, me kind of emotionally upset. Fortunately, my brain ran out of glucose and shut me down, sent me to sleep. So that was good. And so it's today is a new day. I'm here to take a rational view on what happened and if I could prevent that. So that's my day.
Yeah, Friday was that's like one of those days in Kansas when the wind blows and you get a tornado out of nowhere, even though it's tornado season. Yeah, it was that was a wake up call on Friday for sure. Yeah. All right. Well, let's see. I want to get the weekend report read through again. I'll try to get that. Maybe we do that first. If or we can if you got specific things you want to work on or comment on first, maybe we do it that way, and then I'll finish up with the weekend report. But um, the I'm working on a writing project for resiliency and I guess the wisdom of the trail. You know how to survive and thrive on the trail, which is every day getting it done. Once you get started on the trail, you got to keep going. You can't. There's no going back, and there's it doesn't work to just stay there. You got to somehow keep going. So I got a good writing project going on that. It's inspiring for me. Called the Diamond Mind Framework, which is how to build that mental toughness and resiliency. Well, it was pretty timely from having the Friday being Friday. Um, so I'll be working on that later today. Um, I'm writing it in the form of 365 insights. Like one a day as a thing to read in the morning, real quickly in less than a minute to say, "Oh yeah, that's what I got to do," or the same thing at the end of the day as you put everything in perspective. Sort of a daily devotional for mental toughness, and I like where it's heading. Um, I researched it by creating a separate, like a subset of the five frames notebook where I took just the coaching sessions and put them in their own separate notebook. Now they're still in the five frames notebook, but this was strictly just the coaching sessions to get focused exactly on our best practices from that and to come up with the 365 pieces of wisdom, if you will. Uh, it was easier to do it with 500, to be truthful. So you start with 20 major topics, and you make 25 statements about each one of the 20 topics. And then each of the 25 statements about it have five for novice, apprentice, journeyman, expert, and then artist. Uh, so you end up getting a nice, coherent, multi-layered look at the important things. And I really like the way that it's shaped out. It was a good refresher for me as I go through the material. So, who's up first? Who's got something for us to cover? Or I can jump right into the weekend report. That's good too. If maybe as a change of pace, we do that.
That will be great.
Okay, let's do that. Let me share the window here. Excuse me. All right. Can we see that? Okay.
Yeah, perfect.
Does it have all that junk off the screen now?
It does. It looks clear.
Okay, everything clear. Okay, good. All righty. So this would be the weekend report for May 16th, 2026. The things that I'm looking at. Uh, First things first, normal. Now, Thursday, this was all green. And then this was what happens from Friday. So we've got that. Essentially, we have a market that had reached all-time highs and then had a significant pullback. And now we're wondering, all right, what's it do from there? Does it recover? Does it fail? Um, this you'll recall a couple weeks ago, we talked about that being the unusual extreme push of volatility from minus 1.5Z um, all the way up to 2, and then the natural recovery. This increasing volatility the last 2 weeks, and now we're right back at the zero line, which now says, all right, does this become Panic City, or did Friday create a buy on dip opportunity? And you'll see things like the semiconductors, Taiwan, uh, South Korea. Those were the three things the last 3 weeks that had just been on a tear, and they all got hit pretty hard on Friday. Um, so now the question is, are those on a buy on dip opportunity, or is this part of a grand failure? Don't know. Uh, we're we're still barely in risk on because that's above the zero line. Um, Key holdings, yeah, internationals, emerging markets, and tech. That was the strength in technology in the semiconductors. Interesting on the ETF 32, that's oil, blended commodities, and the energy sector. And that will happen in a market that oscillates a lot. When you have an energy sector that has a very large range but cyclic, if the week ends on a after a big move, it makes everything look like this, and it looks like it's the standout winner. And but at the same time, I'm always careful when it's energy because I would rather see something like tech that has straighter curves, and I just know that energy tends to oscillate so much, so I take that one with a grain of salt. The current leaders, it's still energy related and commodities. Um, yeah, Intel, Google, and Caterpillar, individual companies that have been on terror, they all got hit pretty hard Friday too. And again, those are going to be, uh, are those buy on dip opportunities? I think Cat is. I'll be looking to add more to that. I'm interested to see how Google responds, um, especially the ETF two of the 10 ETFs went from above their 4 month moving average to below. So it goes from 100% exposed to 80. So that is also pretty typical of how ETF2 ends up responding to price action. That's a when you see things come back and it starts to fail, the weakest of those sectors go under their 4 month moving average, and it starts giving advice on how to reduce exposure. So that's a typical response of that system. That acts as a bit of uh, a break on just leaping back into the market 100%. So if there were any stop losses that were hit, I have to check to see what my overall exposure is to see if I can actually put money into the market. Yeah. All right. And as we go through this, if there's any questions on it, jump in as we go. All right. This is S&P daily regression line fractal framework. Again, what I notice is this was the great intersection of all this stuff that voted to the south in April, the big turning point, the crossing of the SMA 30 and that 90. Uh, those That's a pretty interesting relationship that the SMA 30 and the RL 90 are approximately the same thing that's how fast the regression line adapts compared to simple moving averages. This was the return to normal, if you will. If you say this was the last time everybody was in agreement, and then this is the long-term fair value, that's the characteristic pattern. And that always feels like a bow and arrow, an archer to me, that distance, there's a certain amount of energy that it takes to pull it that far. And when it can't go any farther and he releases the arrow, it heads right back to the fair value, which then becomes, all right, what are we going to do? I am never surprised when the size of this move ends up being the size. I just clone that. So it wouldn't surprise me to see the move back to the mean, then move that high, which would be about 770. Yeah. Now, as I look at this, um, and I see the RL10, the slope went negative. If you look from all the way back here, the RL10 slope never went negative. It paused for a minute right here. Let me clean that off. There was a brief moment here and here in this consolidation phase right here after the sell off and then the recovery. The RL10 slope went negative briefly inside here and then corrected to the or continued to move to the upside. So there's the RL10 there. So that can happen. I also noticed that from the time that it turned here, the slope of the RL30 was steady and smooth up the whole way. And then the combination of Thursday and the Thursday peak and then the Friday sell was enough to make the RL30 slope start to stall at the same time that the RL10 slope went negative. So that looks to me, that's the reason I would say, hey, that was like officially a test, a warning shot across the bow. I noticed that the SMA 30 and the RL 90 are back into proximity with the long term fair value. So I interpret that the long term swing and position players um, feel like the normal price of the market should be about 730. That's where they've that the feeling of fair value really is in about 730, and that all of this move above was the aggressive speculative traders who are now holding it at 740. Sorry, that's 720. I misread the chart. And then the estimate, the actual Bollinger Band mean is 710. So, I would say there's that's a $30 correction to here, which would be 5%. And that's from here. And that's after it has already moved from 750 to here. So if it were to come back to 710, that would be almost an 8% correction. And that's normal tactical distance that it could fall. It could still fall this next coming up week. It can fall that far back to the Bollinger Band mean, and that would simply be return to normal, return to statistical normal. That would feel like another punch in the stomach, a slap in the face, if it were to behave absolutely normally. But that this this is the test region from the moving regression lines. The longer term regression lines are here. The shorter term regression lines are there. So this is a real distinction between the traders and the long term buy and holders. And in my view, these guys who may not have exited the market here, but if they didn't, they found all their money come back to them. This little rollover makes these guys wonder, hey, maybe I should protect myself against moves that can happen like this. You know, that would not be an unusual thing. And they have more to hold on to from that excessive gains. So the traders, in my view, are more excitable and are ready to try to preserve that extra abnormal move, which can lead to momentum selling, which could now make these guys begin to panic. So this week ahead is really crucial. There's also that whole idea of sell in May and stay away. Anybody that enjoyed that historically amazing move um, might be tempted to sell. So it's a different mentality here than it is over here. This is not the feeling that they have here is not fear of missing out. If you were buying down around in here and in here, a lot of people could hold their nose and buy because had gotten back to the Bollinger Band mean, and then buying in here could be considered fear of missing out. Fear of missing out. This is no longer fear of missing out. The dominant emotion is preserve an amazing run while the nation is at war and the world economy is running out of oil, and um, China and Russia are making noises together. Disastrous trip to China by the U.S. Uh, the reminder of the threats of biological challenges with that hantavirus, the rat virus. So there's a lot of nervous tension, in my view, in the market right here. So that's my interpretation of the four moving regression lines and the shape of price action. That's about a 6 month look back. I kind of like that as a stage setter for getting my mind right about market psychology. What's that mean for me? That means I'm not a swing trader in the week ahead, because this is ripe for 1 day sharp moves and sharp reversals. So I'm maintaining my cash and hedge position in my swing trades. But I'm an active day trader because of the size of the daily moves. And there's, for the day trader with no reason to have overnight risk, that was a comfort to me on Friday. So that's my interpretation of this chart. Any questions on that one? Okay. The 3-day bars and the 9-day bars reflects the same, the same price action. That's the same time frame. I would just note on the 3-day that has created a doji, but where the open and the close were in the bottom, they were like in the bottom half of that bar. So that is really a candlestick guy would say that looks like a top. The fact that uh, that the biggest part of the tail is up here and it's rolled over, and almost but not quite that same factor on the 9-day, but you can see that's a significant pullback. Um, this whole thing was higher lows, still is. That doesn't become a lower. This would have to come all the way down to 710 to get the bottom of the previous chart, and that's the same fall from grace that we saw on the last one. That's a 5% move from there to there. On the 3-day at about 740. But if you're a swing trader, you can't do anything with that. If you're a day trader, you can be alert and say, on the 10-minute charts, there were some opportunities to move around in here. There was an afternoon buy on dip, but I just think when it got to here, it could not even get back to the SMA 30. That was short term tactical trading. And then guys said, look, I do not want to hold this position over the weekend. And so all the guys that made money in here bailed here. And then that's just the crushing blow. And that actually finishes below the VWAP for the day. So that's an act of pessimism going into the weekend by the traders. Just not having to take a risk that you don't have to. So this is very vulnerable. And this on the 30-minute bar, there's 730. And then I said before 735 was the lowest I could talk. That's the spine of the dragon. This price level here is the spine of the dragon on the daily. So there's that much grace right there. So if this were to open inside here but hold above 735, I would be an aggressive day trader on the buy on dip opportunity. And there's going to be people buying the open and the morning session on Monday because every single one of the US indexes fired on a channeling signal. And the channeling system says that when you're in a bull market and this thing pulls back, and if you look at the last 10 days and it pulls back to oversold, that's a trigger to come in and buy a bull market on a dip. And that's exactly where it closed. So we're going to see when we get to the daily that mechanical swing system, which has been a 60 to 70% success system over the last 30 years, it's saying buy everything. So I got to respect the statistical power of that signal to say, yeah, do not be surprised or wonder why there could be sharp buying in the morning. Now, that doesn't mean that there will be follow through. It doesn't mean that that's going to be a successful trade over the next 1 or 2 days. But remember, the 60 to 70% win rate of that has about a 5 to 10-day payoff for the swing trade to work. So what that says is there's about a 60% chance statistically speaking, that 5 to 10 days from now, call it 8 days, that the price is higher than this. That's it. Now, again, past performance is no predictor of success, of future success, but it's hard to ignore a 60 to 70% success signal. So, as a day now, I'm not a swing trader right now. I told I'm not taking those trades, but I am ready as a day trader to find days that are moving up and to pile on that the energy that's coming in from buy on dip opportunists. And that's where I think things like semiconductors, Taiwan, and South Korea, I would expect those to be the easiest targets for the buy on dip guys, especially if you were a person that missed that historical run up in those things and you saw a chance to buy them on sale, you know, there was a 5% correction in semiconductors as a sector just on Friday. So I will be mindful of this energy right here. And so to me, at 735, I'm going to be aggressive about being that guy. If it falls below 735, I'm going to be aggressive looking that way. So all these ones like semiconductors, Taiwan and South Korea, Intel, um, that were such a strong run this way. If they continue to fail, I'm ready to be short them on an intraday tactical basis. Even though I still love them long term, I'm ready to be tactically short those and just follow the money on Monday. So I also would not be surprised to see a follow through, uh, especially if it stays below the VWAP and then opens up and starts. Then this is going to be a really powerful magnet pulling itself. So that to me, Monday's amazing opportunity for day trading, and the Monday, Tuesday, Wednesday of next week, it's going to be some very good day trading. But I am mindful that this sharp pullback does create buy on dip opportunities in the minds of longer term traders. So I'm trying to hold both of those ideas in my head at the same time. What that really means is I simplify my life by saying I'm not going to swing trade. I'm only going to day trade next week. Does that make sense to you?
It does.
Okay. All righty. Now, this is where I can start stalking some opportunities. So, Latin America, things that sucked continue to suck. 6 weeks ago, this was the leader. Now it's the laggard. That that's what I mean. That thing had such an amazing run up that its 6 month performance is still amazing. It's got the second best 6 month performance. The only thing better than it was emerging markets. But one of the things you can notice is that emerging markets held on to its gains better than Latin America. And we saw that last week and the week before. Because what we saw last week and the week before, if we went back and replayed the tape, we said that uh, we saw that ILF and EEM were both much better than the S&P. And then we saw that EEM continued to go up, but Latin America had started to fail. And this was Latin America plus Mexico and Brazil, and Taiwan and South Korea continued to go up. And so the S&P had become better than Brazil, Mexico, and Latin America. And then this is just a continuation of that play. That the S&P was up fractionally this week, whereas Latin America, Mexico, and Brazil continued to fail. And then these guys have fallen quite a bit. So there's the big sell off in emerging markets fell as much as Latin America fell. Technology and the semiconductors held on. They were flat or a micro loss for the week, had a historic run up. But now this is starting to roll over too. And the other thing I want you to notice on this chart is the extreme conditions happen to things that are at the extremes of good and bad of these. That the mid range gets dominated by average and slightly above average, but you get the extreme moves from things that start the week in extreme conditions. So, treasuries is just, I mean, with that when the yield went over 5%, man, that thing is at the bottom. When we go look at the sniper, we're going to see that treasuries is at the bottom of its 150-day channel. It's the bottom of its 30-day channel, the bottom of its 10-day channel, and has a quiet 5-day volatility. I mean, that's just the biggest catfish opportunity of all time. That's what will happen when guys are chasing yield, is that the price will go down. So that's actually a historic moment to lock in a good long-term interest rate. Like in our in the cash portion of our soccer association's endowment, if you will, I've been I've been on the board for 15 years, and in that time, we've been able to accumulate $100,000 in cash from operations. You know, from annual fees, um, some grants, some concession stands, and things like that. Contributions from businesses, and I've been able to build that up and have them use laddered CDs to create cash flow while preserving the endowment. And now we're making enough from the cash flow to fund our scholarship program. Well, as I look there at treasuries, I got to take a look and see this might be a time to lock in some even better rates on longer term income for the soccer association. So I look at that as so now what do we have? I think of that as a giant bag of money for them. It's 100K for our little nonprofit. So we're going to use that for capital investment. We're looking to build an indoor facility. So I'm trying to grow that so that they have enough capital to fund a indoor soccer facility. But at the same time, the interest off of that is now paying for the scholarships. So this is a good position to be in. So when I see yields like that in the treasuries, that tells me it's time to go take a look at, maybe it's time to lock in some better rates on long-term interest for them. All right. So ETF 22. Yeah, the losers continued to lose. And this is that short-term spike in energy. Last week, that number was a big red number. So this is the argument that energy it just goes like this so much. And if you can time it and catch turning points for your short-term opportunities, you get chances to take advantage of the inherent volatility of energy while it is at peak volatility, driven by the shenanigans for price of oil. Um, yeah. Finance, healthcare, treasuries, even utilities are getting punished. The yield on that's probably pretty good right now. That might be a time to start thinking about XLU as an income producer. I will go take a look at that. Yeah, nothing else really to see. Yeah, tech, energy, tech, emerging markets. That one, that was the big warning shot right there. Uh, ETF 32. This is the blended commodities. So again, that's a mixture of four things. It has agriculture, um, base metals, precious metals, and energy. Those are, and basically what DBC does is it's a blend of the other Deutsche Bank focus commodity areas. That's what gives you the combined DBC. The way I'm playing commodities is with the Vanguard. Um, they have a commodity strategy, and it's a CM CMDX, I think it is, and that thing pays like a 12% annual dividend. So I'm using the Vanguard commodity strategy for to try to capture some of this energy and get and raise some income. Um, Oil exploration and PBW, I think, is a this is a long-term macro play. This is the clean energy alternates. Now, during the entire Biden administration, that one was a really good long side trade because there was a lot of government money and government contracts to try to build out U.S. capacity. So clean energy was making money from government subsidies and investment money and not from the sale of energy because they didn't have a competitive thing. And then Trump destroyed most of that because he's trying to reward big oil. So PBW has been in a long term downside. But now it turns out that all of the capacity and the technology that was funded by that speculative R&D money is that we're starting to add more renewable energy to the grid than fossil fuel energy. And that's really the case in China. China has made extraordinary leaps in adding um, renewable energy to their grid. And so I'm now of the opinion that this might be a macro play. If I wanted to do that as a macro play, what I should do is take PBW and break it into a components analysis and then create a list of who are the companies that constitute this index. Because now that this is starting to recover, somewhere in that list of companies are going to be the real standouts, the things that are actually making the most money. In fact, that's a pretty good idea. Should start doing that. to find out who those long-term energy uh, places are. Because that could be, if it's batteries, then that makes you think, hey, maybe it's time to start looking at lithium again as the battery storage commodity. So that's going to be a research project. Now, when I run the gold recovery system on this audio, we'll see if it picks that up as an important research topic. So I'm going to plant the seed. Now, since I just said that in this narration, maybe then the AI that's reviewing this will really pick that up, which tells me that if I'm using AI as a note taker and a research finder, if I'm just narrating stuff like this, then I might need to think about using a keyword uh, to make sure that it gets tagged with, make sure I remember not to forget this idea to make it stand out. So using a verbal highlighter or a tag, uh, I think it's probably going to be keyword like note to self, research project, PBW, decompose index, find sector winners, look to add to long-term portfolio. So an AI technique. Yeah. Alrighty. Is there anything else you want to see on that? No, I think that's everything. Let me, no, I guess I would say the other little hidden gems inside this would be finance and gold. So XLF has been at the bottom of the stack, but it suffered less. It was actually an above average performer on the 1 week. So I'm wondering, so in the same move that had SPY moving up and tech was better, finance was the laggard. So if tech starts to suffer, does that mean, does F join it because the whole index is going down? Or is there a rotational strategy where excess gains from tech rolls into finance while they buy finance on the dip? So to me, XLF would be an interesting candidate to observe his behavior. You can watch that one. Because you can see it held up better than consumer discretionary, which was down 3%. And healthcare is the other alternative. Maybe that healthcare might have been at such a bottom out that it was a buy on dip opportunity and maybe a defensive play. So we'll watch that one. Yeah. Okay. So since we're talking about historical craziness, two tech companies, could they be more different but more the same? I mean, you could imagine how this kind of performance in Intel would make people look at Intel's minus 13% as a buy on dip opportunity. You could also imagine how people that were enjoying Intel on the way up, there's still a plus 40% gain in Intel that has to be protected. In spite of the fact that Intel got smoked, there's still a 40% gain to protect, so it could continue to get smoked. So Intel has to be on the short list of tradables. And then Cisco up 22% last week. Those are two charts that are going to be worth looking at. I look at this as the opportunity on Google and Cat. Buy on dip opportunities. NVIDIA had a bit of was more robust. Boeing got slaughtered. Is that a sign of a peace deal coming with Iran? As they try to get out of the trick bag? Now, this is a definite target for buy on dips. Great American company does better in recessions than other targets because it's home improvement. People are spending money to improve their home rather than chasing other real estate. So that looks like a buy on dip candidate. Now, when I see that, what I'm saying is that means I got to go take a look at his total chart and then do the multi-lens, multi-time frame, multi-lens analysis process to see how urgent I am to want to buy that. So note to self, Home Depot is a research target.
Ken, what
Yep.
about Nike? Nike was one below. Do you think is a good idea?
Just a minute. Say it again.
What about Nike? It was one symbol below.
Oh, yeah. Nike is just, I'm always ready to short that evil company. It's a good target for intraday shorting for absolute short. I never go long Nike overnight. I'm willing to, I can intraday Nike on the long side, but I never want to hold it overnight because I hate the company so much. I feel like if I'm making money on Nike going up, I'm stealing money from them that I can use to short them or to pay for scholarships. But that's a really good target for short side. I would never go, just philosophically, I would never go long. I can't go long Apple because I hate them so much. I can trade them intraday, but I just have a personal psychological block against them. But Nike is that's a candidate for short side weakness. Does that answer that question?
Yes, thank you.
Okay. Yeah, what I try to look again, what I'm looking for on this whole chart is the extremes. And I want you to notice that what I've done here is the blended monthly rebalancing system is using this part of the chart. That is the monthly rebalancing, which uses the 70% of the 3-month performance times 30% of the 6-month performance is what produces the blended return. And then we use the blended return. You can see that's how I've got it ranked. We use the blended return to decide what to hold for the week ahead. What I have noticed is that from the extreme conditions of this chart, you get extreme performance. So I'm always interested in the things that are at the bottom and top of this. There's your strength and energy this week. Here's some strength in the defensive play. Coca-Cola. That, I believe, is a flight to quality. Instead of going to treasuries, you go to Coca-Cola. And then there's Goldman Sachs. That's the recovery in finance and the recovery in finance. Visa. Johnson and Johnson up 2.5. That's a flight to quality. So there's some flights to quality on the U.S. large caps. And Walmart was better than the S&P. So those guys are on there as my flight to quality targets. Now this one, ETF Max, looks at there's like 183 ETFs that are liquid enough to consider as targets, in my view. And so the first thing I notice is this. So natural gas has done this, and there's that little spike. India has just been consistently bad. Excuse me. China just getting murdered. This is one I don't understand. How could they be so bad as to get that? Whereas that, it seems to me water's got to be better than gold. When you take a look at what it takes for cooling all the data centers and keeping people alive, I don't understand PHO. I may have to study that. I don't know why that's getting slaughtered so much. There could be a stealth trade inside that. So what I do is again, I take a look. These are the out of the 183. This is at top 30. So that's like the best performing, the top six, or the top 1/6, and then you can see that's the boundary between average plus one standard deviation. So everything about is in the color coded green. And then I just take the bottom 8 or 10. I guess eight, bottom eight. And that's the marker between plus or minus. That's like a -1Z, and that's the +1Z. Excuse me. The two weakest signals that went to cash this week, Europe and Latin America. Inside the US, it's tech, then small caps and large caps balanced, with small caps slightly better on a tiebreaker, and then mid caps getting murdered. Strength and energy and tech for the sector spiders. Um, Commodities and oil are on a tear. inflation and energy. But the S&P has been better than treasuries, real estate, and gold. So a pretty narrow set of choices. There's your Taiwan and South Korea still in the green. Emerging markets now only above average, used to be green. Commodities and oil. Global tech fueled that last little rage up with semiconductors. Those are the stories. Everything in the middle is just getting punished. A much smaller handful of green. There's oil, energy, Taiwan, and South Korea. There's three for emerging leaders. That's kind of your green and your white. So tech, tech, tech. Uh, the energy could be vulnerable. The white and green. That little peak was part of a larger weakness, though. So energy is cyclic and is at the top of its power stroke, if I can say it that way. This next little set are all the things that are I'm looking at as white and yellow. Was weak, now is good. Could be the next layer of new strength to exploit. So a quick scan of those indexes. What do I see? Small cap growth, emerging markets growth, biotech. Mm, yeah. The trouble with these growth indexes is that they were not even as strong as XLK. XLK itself got up into the green and white. So that's an ETF. You instead of buying these other divergent or diversified tech, you could just get the source of the power directly from the sector spider. So all that diversification did was mean you didn't get as much of the strength as the direct leader itself. So I take that under advisement. That's why I like the sector spiders. The standard ETFs that are volatile enough to trade are all the ones that are in green, because this is the top 30 by daily dollar volume. And then this is the stats on the ATR percentage. So South Korea, semis, oil, software, silver, gold miners, biotech, and Brazil. Guess I should try to find a gold mining company in Brazil. That thing ought to be amazing. All right, so that was the weekend. Um, this is the two-page summary of like the top, probably the top 80 or so most liquids. We've already seen all that trend data. So I'm going to go straight to the daily. So So this is the transition in my mind from that longer term macro and swing and position into daily opportunities. Any questions before from that before we dive into the daily? If not, okay. So this is the essentially that yellow zone trading, and McDonald's has the best 1 day swing trade value, and this is McDonald's on the daily. So this was how tiny McDonald's was. Now, we saw before how big the gap was in the S&P and the size of the range. McDonald's gapped up and had just a sideways kind of a day. So it's got this maximum range compression going on. And it is a quiet, if you take a look at the 5 day box, that's quiet. But if it were to break below the 10-day low, I would want to be short. So I'm ready to get short if it breaks below the low. And a second position if it breaks the 5 day low. And it's in the bottom of its 10-day bracket. And it's in the bottom of its 30-day bracket. So that's a catfish. Sitting quietly at the bottom of the river, just ready to make a run. I would
I have
see,
a question.
yeah.
So on this page, if
Yeah.
it's not possible to watch it daily,
Yeah.
would it make sense to set a trade where it opens if it's like on the long side, if it goes above the last day, and then there closes either when it hits the low of the last day or just the end of the day?
Yeah. Yeah, yes. Yes, you could. I would rather if this was a volatile play, so it's already in play.
Mhm.
But you can see already from the last 5 days, this could still continue to go sideways for a long time.
Mhm.
I think it's a candidate as a buy on dip flight to quality because it's like for the same reason that people will buy Coca-Cola. I think of this as the the Big Mac and a Coke trade. The I would feel safer with I would if I was going to go away for a week. I would say I would buy it above the 5 day high
Mhm.
because the move to the 10-day high is good, and I wouldn't be upset if you used a wider stop, like all the way back to the 5 day low. Like if you waited to get short below the 5 day low, you're not really giving up a lot, but that's like a confirmation of the move. Like if this thing comes out, here's I guess what I would say. If this thing comes out of the yellow box, it's still inside the red box, which is quiet. That's not really a volatile move yet. But if it drops below the 5 day low, that's also a new 10-day low and a new 30-day low. So that one looks significant. If you got short below the yellow zone, like you got short in this region here, it's because you're hoping that it will continue to suffer and that the big explosion down would be when the 5 day low hits. So the short side, I could see that trade. The upside trade, I definitely want to be long if it's above the 5 day high. Like I could put a mechanical entry in there right now and and be happy. And if I got long here at the 5-day high, I think my 1R would be the 5-day low. And I could use that as my risk box, which is 279 to 272. So a $7 stop on a $280. That's 2.5%. That feels like a correct move. Right? Um, the average range, let's see, the range average has been $5. So if I had a $7 stop, so if I got long here, it would be more than an average range. As that feels like a good trade frame to me. Does that answer the question?
Yes, thank you.
Yeah. Yeah. There's Home Depot and Treasuries in interesting positions. There's your buy on dip in Brazil and Latin America. Yeah. Yeah, the range stat divided by the my risk says that thing could, what you're hoping is to see an upside move like this. You're hoping to see a downside move like that too. So a breakdown from here, even if it was that day, that was from 286 to 275. So that was a $12 day. And his range stat is 7. So you had 3 days to the downside that were larger than range stat days. So that's why I like this short side trade on that one. But I'm ready. The fact that it didn't fail on Friday makes me wonder: is that a candidate? Was that buying as a flight to quality in McDonald's? This is a new chart. What I'm doing is I'm taking now. If you have Edge Raider or TC 2000 bundle, you get all the sniper setups in there. This is just for my spreadsheet and just for my 50 or 60 symbols that I track. And what I'm interested in are the very volatile and the very quiet. So what I'm doing is I'm using the z-score of the 5-day volatility percentage. So range percentage of the 5-day. Yeah, like we just saw McDonald's. His 5-day range percentage z-score is a minus 0.9. So what that means is if we took the last 30 5-day ranges, he's at Z minus 1. That's how quiet those 5 days were. We just saw that on the chart. So this sniper quiet out of my stack of 60 symbols, which is large caps and liquid ETFs. It's finding all the Z scores that are less than 0.5. And the reason for that is that the volatility Z score looks like this. The shape of that histogram looks like that. So it's got a fat right tail because things can get really, really volatile. But as volatility goes to zero, it gets compressed. And so rather than waiting, I set the threshold for quiet at minus 0.5 instead of -1, just because there's so few things that actually can get quieter than Z minus 1. Like, for instance, there's only the Dow, holy smokes, Finance and Merck and JP Morgan. So in order to get enough opportunities on this side, I set that equal to minus 0.5. Does that make sense?
Yep.
Now, then what I do is I then rack and stack these. I sort by the 10-day NDX. So these are all the ones that are quiet and above their 50-yard line. These are the ones that are all quiet and in the bottom. And what I did on this was I set that threshold, the color code threshold, to 0.15 so that I could get some more. So you can see Merck is in the yellow because it's 0.16, but Morgan is in the red because it's 0.11. So here's what I'm looking for. These are all things that have a very narrow last 5 days. Okay. The 5-day range is very compressed. And then I look to see what is their trade location. So these three, if I were to take the 10-day range, and make that the 50, these guys are in the top half of their 10-day look back. And then the other locations for the sniper, the 30-day and the 150-day look back. Google, Caterpillar, there's your long-term strength. Position trades for me still are. 30-day, Google. Caterpillar is pretty good, but not great. Above average. So if I am a real short-term trader, all I need is, I think, those two columns. And so these three are in the top half of their 10-day look back. So if this is the 10-day, let me color that. These are things that are 5-day quiet and then the upper half. And you could see how that could continue. Whatever strength moved them to the top of their 10-day, that could just get going. And the fact that it's quiet says there's nobody panicking about selling. The other thing I look at is I look at these guys on the bottom. These are the ones, on the other hand, that are very quiet, but in the bottom of their 10-day range. And that's sort of like the argument for, I guess it was McDonald's. Is that if that thing fell and then fell below the 10-day low, that could be a big fail. And it could go from quiet, 5-day quiet, to 5-day volatile in one day. So I really like those. And then for Michael, there's your Nike. And then Procter and Gamble is like, how does a great consumer staples company like that be so bad. Look at this thing is a damn catfish. It and Nike. Look at that. Holy moly. You don't get much more catfish than that. So I find this just that chart right there gives me insights onto some things that I'm ready to trade on a 1 day basis right from the get go. Now, the chart above that, the volatile, I'm doing the same thing, only now I'm taking the most volatile things. Now, you don't see that very often. A 3 sigma and 4 sigma 5 day range percentage. That had to be extraordinary. Let's see here. Let me find Cisco in here. Yeah, huge gap. So now you say, look, wasn't swing tradable. But this thing is that opening range 10, that was the opening range for the whole day. And there's your VWAP right in the middle. Now, this thing is ready to, this would be one of those, Michael, I'm ready to go in either direction on that. And if it goes below that low of the day, oops, I must have hit a button somewhere. Sorry about that. I accidentally hit a button. So Cisco, I'm ready to get on board that one, the Cisco train. The other interesting one was Ford. Yeah, I'm ready to get short Ford. There's your range. Yeah, if that were to fall below 13, then it's going to come back, yeah, all the way back to 1190. So that was 2 days of follow. That was a Ford was horrible. 1 day a move. There's your second day momentum that stabilized. And then as part of the global meltdown, there's the gap, panic selling, and then just stabilize. So you could actually look at Ford as there's a good yellow zone for him. I'd be willing to be long here and big short there. So it has to break out of that box. Make a bet on, and we'll see how that shows up on Monday. So I'm using this chart now strictly with the snipers. So it's looking at the 150-day, 30-day, and 10-day NDX for location. And then I'm primarily looking at the 5 day volatility Z score. I included the 1 day volatility Z score. The difference between those two is the N. This one is the Z score. If I looked at the entire 150 days, from day -1 to day -150, and found all the daily ranges, and then found the average, and then plus or minus one. Whereas this one just uses the last 30 days. This uses the last 150 days because I'm actually studying to see what the difference between that longer term volatility percentage is versus the shorter term. So it's still cooking on that one. So I find on this one, then give me all the ones that are in play, violently in play. Z score greater than one, and then I just find the 10 days. So like Boeing and Brazil and Latin America, those are all going to be things that are, if that's their last 10 days, those things are all sitting right at the bottom of their 10-day, from whatever their 10-day high was. And the 5-day range is large. So it's had a big move here recently. It's had the big move in the last 5 days. And that thing will be ready to fall. So Boeing, Brazil, Latin America, and Intel, very interesting. Long term good, shorter term starting to weaken, and the 5-day Z score is extraordinary. Yeah, but a pretty quiet day actually. So that is, Intel was great, big move down and terminated in a doji. That's everything I want right there. That's everything I want is Intel for a 1-day trader. Yep, there it is. Now this thin red line, that is the relative performance of the S&P. So this little gap up and go in Intel, which went from 82 to 132 is a plus 60% gain. Now you will recall from the BMR chart where I was saying, yeah, Intel was down 12% from 13% for the week, but was still up 40 or was up 60% for the month. That's what that looks like. So even though this is minus 12, that's minus 12%. There's still a large money that they're trying to preserve. So that, and then it terminated in a little doji. So that's its range Friday. Now, if you're a trader and all you can see is this, you're ready to buy that on the dip. There's your dip. Intel on sale. So you could buy that if it breaks above this. And then if you're a pessimist, you say, hey, that thing has still got it's still way overvalued. So that's what makes that one an interesting trade. There's going to be a lot of passion on that tomorrow. I can't wait for tomorrow. That's going to be fun.
If I may comment over here, so what I see on Intel
Yeah.
is the majority of the gains and the losses are in gaps.
Yeah.
So
It
it
has an
looks like
intraday move. Well,
Mhm.
here's the thing. It's let me see, it's range. Let's see, our range stat. Uh Trying to find his range stat in here. Wait a minute.
Can I share my
His range
screen,
stat
Ken?
is trying to read it, $9. Yeah. Yeah, he has big gaps, but there are actually some follow throughs in there too.
Right.
Like, let me see if the last 3 days, not so much, but there are some days where the follow through it does have some intraday moves. Like this first panic sell, that was a big directional move. And then this move here, a big move up and a big move down. This one was a big move up and then allowed an intraday move like that. So there are some follow throughs. Intel is in the position right now, and to me, it's ideal because it has a combination of very large gaps, but also very large intraday moves. So if you're a day trader and you can't get the gaps, there's still room inside Intel to play ball.
Can I share my screen, Ken?
Sure.
Let's see. I want to show you a chart on Intel that I have. Let's see if I have it here. Let's see. I guess it won't let me. Let me see. Take a look at this. Let me know whenever it's
Yes, sir.
available.
It's up.
All right, so this is Intel, and I wanted to share it because this is something that I learned from you a long time ago. A few of the things that are happening. First of all, that's what Intel looked like. It just surprise bars, and then this was the RL10 linear regression 10 period, and then this is the 30, this is the 90, and this is the 270.
Yep.
And here's what happened. When you superimpose the Bollinger Bands 30, with 3 standard deviations on top of that,
Yeah.
this is what it looked like. So after a very long period of consolidation, we had a super pinch on the daily chart.
Yeah.
And I have a recording from you that something that I learned from you a long time ago when you talked about the potential for super pinches in all periods,
Yeah.
where the energy accumulated could be from 5 times the size of the river
Yeah.
to potentially 10 times.
Yeah.
And in the case of Intel, right now I use the retracement tool and I put a 10% on the bottom. Well, it's not there, but
Yeah.
if you actually do the measurement, it actually ended up moving approximately 10 times the size of the super pinch to 130. And the other interesting thing is that when you look at Intel from a Bollinger Band perspective in multiple time frames, not only on the daily, and if you go zoom out and look at the weekly or the monthly, this is what you're going to find. You're going to find a statistical move that, for example, right now, the 3-month, 3 standard deviation monthly Bollinger Band is at 96%, $96.
Yeah.
And the whole bar is still outside that monthly Bollinger Band. And, it's not an impossibility, obviously, as it is reality. There's no limit on what the markets do. But statistically, talking about the expectations is that, anything at this point above $96, it's you should expect some type of retracement. And the same thing happens with the weekly chart.
Yep.
We were outside the weekly chart, the weekly 3 standard deviation, and now it's pulled back. But the interesting point here is that the compression range that happened on Intel was a precursor for the potential magnitude of the move. Unfortunately, I participated only, partially. But anyway, I've seen what you mentioned on Kevin and somebody else.
Well,
I mean,
the interesting thing on that is that when you get the Z3 pinches on the daily like that, you get that
right,
compression. That almost feels like the R10 on the when you take the range stat and divide
right.
it by 10 to get the R10, the equivalent of that on those daily bars is that the Z3 band becomes like the R10. And again, you can think of that as a 10-fold factor.
Well, the other one that it
Yeah.
gave that same signal on the daily chart was on Microsoft on the way down, and
Yeah.
unfortunately too, the same thing happened here on Microsoft, and
Yeah.
that price change targeted 350 on my numbers, and it got to 355.
Yeah. And
So
that's
actually,
also, and that also goes all the way back to the previous support level too, the turning point.
right.
Yeah.
So I wanted to share this, and also I wanted to share a couple of things. Let me see how I can switch gears here. Let me see. Let's see if I click on that. Can you guys see that screen?
Yep.
All right. Here's the, market movements rely on a lot of different factors. Obviously, the capital that's available to invest, the future growth, GDP, interest rates, all these different things that are important. And we know that capital needs a place to rest, and it's always there. But in the long run, fundamentals are important. In the medium run and in the short run, mostly, it's really about flows and positioning and asset allocation and market participation, all these different things.
Mm-hmm.
What I just want to highlight right now is that also, for example, looking at correlations. Correlations in markets are a very interesting thing, behaviors, because they go from positive to negative, and we don't know when they're going to switch back from extreme positive to extreme negative, or when they stop mattering. But there's always thresholds that we reach that are important, and the market doesn't never tell us when something's going to go. For example, historically, the dollar goes up, commodities go down. If the dollar goes up, the profit for corporations go down because of their exposure to foreign sales, and vice versa. But these things go from positive to negative to mattering or not mattering. But why am I bringing this up now? Is because we are at a certain threshold that historically has had kind of like what you're talking about, the oversell reaction, the channeling reaction has a 60 to 70% probability. We're reaching certain thresholds where there's some inflections can take place. For example, right here, okay, this is Merrill Lynch research. US PPI running at 6%, CPI almost at 4%. Historically, when CPI crosses about 4%, markets tend to get some type of pullback between 4 to 7%. And that's happening right now.
Yep.
Long-term treasuries are trending up. That's they're breaking up worldwide. That is very important because that has an effect on the capital available to be leveraged while still invested in the equity market. So all I want to say is we are at a place in history where, even though things can continue to move in the direction they're moving, we should not be surprised, as you like to say, we should not be surprised if things reverse or certain thresholds are closed or crossed, that the speed of the movement could accelerate surprisingly. So we shouldn't be surprised by an acceleration in movement, as we just saw on the upside. We saw the largest or one of the fastest rallies in the history of the stock market happened here over the last few weeks, which is great. And what I wanted to highlight also is that some of these flows are dependent on the ability of capital to be deployed in certain asset classes. Usually underinvestment allows for bigger opportunities, like it happened in 2009. This is a chart of the equity allocation of all Merrill Lynch investors
Mhm.
across the history. And as you can see, periods of low allocations drive extreme double-digit returns. And then we can see the short-term peaks that happened in October of 2021. And now, last Friday, we closed at a new record high for equity allocation from their investors. And what this means is that pretty much everybody's in the boat and everybody's fully deployed long. And at the same time, not only their equity allocation is at the highest ever, but their cash allocation last Friday was the lowest equity allocation for the last, actually, I think in the company's record. So this is a representation of obviously all of Merrill Lynch clients, both private client and institutional, represents a very good sample of the population investing in the asset classes, and it's telling us that everybody is long, historically long, and everybody is lowest cash allocation exposure right now. Therefore, we should just pay attention, and that's all I wanted to share.
Yeah. It's everybody that could suffer from fear of missing out is in,
Right.
and we're at the maximum fragile. We're a bunch of fat people standing on the top of a ladder that's fully extended and is not well braced, and there's winds coming. Humpty Dumpty falling off the wall is how I read that.
Yeah. Merrill Lynch research that the chief investment strategist, very, very smart man, and he also shared the fact that the separation in price from the peak last week in semiconductors to its 200-day moving average is at 65%, which historically is one of the top 5 moves in the history of
All
markets.
time.
All time compared to the Nikkei or to the Nasdaq.com bubble, we're higher or whatever. So, it doesn't mean anything. It doesn't have any predictive value, but it's just an awareness that we all need to have.
It's a water balloon that is at maximum stretch.
Yeah.
Yeah. All right. Let's see. Let me roll back into the. So anyway, that's how I'm using this little sniper cheat sheet. I find this to be very handy and helpful. And I know you guys are more swing trading than here was this was a intraday sniper trade on I'm trying to remember which one this was. This I want to say this was I think this was Intel. No, let me I can't see the symbol on this one. Hold on. Oh, the semiconductors. That's right. Yeah, USD. So this was the high, or no, this was the previous low of the day at 1. So there was a gap down, and then this. I'm picking this up. This was an afternoon trade. The USD had big gap down and monkeyed around, got back to the VWAP at 2, breakout at 3, caught a 2 at 4, and then hit the peak of the intraday move at 5. It got back to the Thursday's low of the day. So after the gap down, it managed to close the gap by 2 p.m. at 5. At 6, it rolled over, and I got short as it crossed the PSAR dot with a standard risk. At 7, when it crossed the Bollinger Band mean, second position, RL10 reversed. I took a 1, 2, 3 exit at the spine at 8. price moved up to the PSAR dot, rolled over at 9. I got short when it came out of the dragon again. So this is a case where it couldn't even get to the red dotted line, which is the SMA 30. So I get short at 9, again, standard risk. It breaks below the VWAP. 1, 2, 3 exit at the spine in the usual way. It rolls over again at 11. Can't get to the Bollinger Band main. So I get short at 11, caught a 2. And then I exit before the close at 12. And then the close at 12 compared to the VWAP at 13. So that was a big move out of the semiconductors with no interest in buying it back. That was a panic move there. So that turned out to be a pretty reasonable trade. That was probably 4R out of the series, when it maybe 5R out of the series. Now that I look at it. So most of the time you see me doing the sniper trades of the day, right from the opening and all that. But this was one of those on a Friday, a historically big move down, and semiconductors fought their way back. I was kicking myself for not getting the long side trade. I missed that one. But when it started rolling over, I just started, and there was weakness across the board in all the indexes. I said, let me give this one as a try. So this is a case of an afternoon collapsing dragon kind of an approach. That could also, if you change the time frame on it, you can imagine how those are daily bars too. If I was swing trading or position trading, that's exactly the way I would trade those if they were daily bars. So that pattern is very fractal in that sense. That's what I wanted to say about that. Let's see. That's the 3-day. We've already seen that chart. Market health, we've seen that one from the weekly. 30-minute, we've seen that. Yeah, so now this is the dashboard one. Let's see. So again, bullish normal, oversold, risk on, turning point. This was the one I wanted to show right here. This was all of these overreactions. Those have been long side successful trading systems for swing trading. Typically, the payoff is 5 to 8 days, and it would be automatically buy at the open with a 10% trail, and it normally will pay off in 5 to 8 days. So there's a good buy on, if that's the price action here. There's a good buy on dip opportunity getting ready to happen, according to that metric. This is the S&P. Now, even with Friday's negative action being down 1.2%, it's still up 12% over the last 40 days, which is still a Z-score of 1.6. But that 1-day move took a lot out of it. And as we go through longer term, heading to shorter term, you can see the ascendance of energy, the diminishment of tech. So this is coming out of that's energy, money coming out of tech, money into energy. These two guys have been benefiting nicely. This thing is just so incredibly overpriced compared to earnings. Irrational. Here's the Devon Energy resurgence. This weakness in Microsoft and Intel, the 5 days. Boy, that's just I think the party's over for a while in semiconductors. I'm going to say that. I hate to say it because I've enjoyed it, but yeah. Dow tactical summary. Intel, United Health were the big losers. Big breakdown in Home Depot. Wow. Where have I been on that trade? I should have been able to detect this much sooner. Like, um, where's my annotator? When that sell-off happened, Home Depot went down along with the S&P. This was the S&P's incredible run up. Right here, Home Depot stopped following and started this. I should have been able to pick that up in here. That's bad. But that is an extraordinary sell. Boy, I just missed that altogether. Boy, that's just there's still probably room to the downside on that. Longer term, wow, that's really bad. There's problems in that company. Um, that's everything I want to show. So lots of auto framers. It's a buyer's market, but no hurry. Tactical, big breakdowns all across the board. That big breakdown in treasuries that you see is part of that rising yield. That's price dropping as yield goes up. Historic opportunity to lock in good long-term interest rates. And that's pretty much everything I want to cover. Yeah. Otherwise, the daily's the daily. So I gotta get ready to. We're gonna head out to with the kids here shortly.
Do you have a couple of minutes, Ken, or
Yeah. I just want to. I wanted to give you a chance to get in the closing comments, but that was all I wanted to show. Everything after that is kind of just tactical stuff. So yeah, let's go.
If I may share for a moment, I want
Yep.
your comment on the coaching of the AGQ trade that I had.
Yeah.
Just a moment. So let me just move the sites. This is dailies, and this is the last leg. So I started to accumulate here it hit the dragon.
Yep.
Then I bought a position when it crossed the dragon.
I like
I
it.
think I moved there. I missed the position over here when it went over there. So this one, the purple one is a 200-day,
Yeah.
and the green one is a 50-day moving averages.
Yeah.
So I think I missed buying a position here when it crossed the 50 days. And I bought two positions too late over here. And then this kind of like, became like a candlestick with, almost like a doji.
Yeah.
So when it starts falling, I sold like about half of our positions here.
Yeah.
And this was a Friday. I basically sold it on a close. It's just like a fill that wasn't there. So I probably should have
All of
sold
it out.
everything here.
Yeah.
Is that the way that you would read it, or
Yeah, I like the first two positions. I understand the third and fourth positions, but my comments about swing trading are remain in effect. That man, I just, especially silver, that has become such a cyclic, almost a maniac trade. I can't swing trade silver. I'll trade it intraday, but man, that's I understand. I love the first and the second. I understand three and four. I like the exit. I think I would have tried to keep 70. If you put the keep 70% on there,
uh-huh.
you might find you'd be all out on the day that you sold.
Okay, yeah. Yeah, that would probably kick me here. Yeah. I would keep
Yeah, now go
70%.
to the right where your exit was.
Uh-huh.
Yeah, that day right in there.
Uh-huh.
If you hang a 70, keep 70% from the highest high of the previous bar,
Mm-hmm.
you'd find that you'd be exiting everything in that bar right there,
Okay. Yeah, probably
right
would be
near the
exiting
right. Yeah,
somewhere.
somewhere right, almost right there.
Mm-hmm.
Like when that third and fourth position go underwater after a big gap down and it's selling off, dude, I'm out.
Uh-huh.
I This is a bird in the hand worth two in the bush. I cannot let a winning trade go negative. So I think that my coaching on that would be you've got to monitor you no matter what else you're thinking. You got to keep 70%
Mm-hmm.
of good trades.
Mm-hmm.
And that would have been a sell on that day.
Mm-hmm. Mm-hmm. Thank you. Thank you, Ken.
All right.
Yeah.
All right. Any
And
other questions or coaching?
um,
Michael, you got
I,
one? Or do you have another one?
I do, but if someone else has,
No, no. I'll let you go ahead. Let's get yours done.
okay. Just a question for the Pen 3.0.
Yeah.
The way that I'm doing it, or supposed to do it, I just load up the write up into the AI, correctly?
Yeah,
Correct?
yeah, just copy the whole thing and drop it in. Now, I'm going to send you an improvement on that. It's Pen 3.2.
Mm-hmm.
It's even better. 3.0 is still really, really good. It's already, I mean, when I had Pen 3.2 evaluated 3.0, it said 3.0 is still exceptionally good, but 3.2 is really good.
Mm-hmm.
Um, so
Thank
I will send you that today.
thank
All
you.
right, Michael, what you got?
No chart today, but I have
Nope.
a question. What is it, pen 3.2?
Oh, so Pen 3. It is
Yeah,
a
or
prompt.
pen
Yeah.
3.0.
Pen is a prompt engineering navigator. It
Mhm.
is a operating system level prompt for AI that acts like a strategic planner for any project, any problem, any opportunity I'm working on, trading, army, business, consulting, everything that I ever do. I start with a pen conversation. Like
So,
this book that I'm writing now on the resilience and trail boss wisdom, to try to I want to try to create a prompt to pull all of the good ideas out of the coaching audios. I go to Pen 3.2 and I copy it, paste it into the AI. I run the prompt. I start having a conversation. It says, what kind of work do you want to do? And I start describing the project and the audience and the outcome, and it will develop a prompt to do that work. So it creates, instead of me trying to write a really good prompt myself, I describe the work that I want done to that AI, to the Pen 3.2. So what you want to do is load that in and then just start talking to it as it, picture it like a general contractor. Like you want to build a house. Are you going to build the house? No. You're going to design the house? No. You're going to describe what you want. Well, maybe you are if you're good at that, but I'm not. But if you describe what you want in your house, what you want your house to be, to your general contractor and architect, and they design the house, and they come in and show you, this is what we propose to do. Does that meet your intent? And here's how it's going to work. And this is the work that we're going to do. And when you say yes, it will then write the next set of prompts to hire all the subcontractors to do the work. You know, it organizes the phases of a project, and it's just an amazing strategic planning tool and a shop foreman. Like it can run the shop floor, the master production. So I will send that to you. I thought I had already sent that to you, but
If
I'll
you
send
do,
that to you today.
I'll be happy to receive
Yeah.
it as well.
Yeah, yeah.
And one more general question, because many of you guys mentioned some kind of like AI training trainer, some personal trainer.
Yeah.
Is it you just go to Claude and you start?
Here's what you do. The best, this is what I do for the Army. Pen 3.2 is how I trained the Army to use AI. So we have 1,000 students in our college for a year. Those 1,000 students are going to become all of our future general officers and unit commanders. I'm responsible for teaching them how to use AI. The way I teach them to use AI is I give them Pen 3.2 and I tell them to use it. Because Pen 3.2 teaches you how to use AI properly as you work with it. Because you, in fact, what I did was I said, hey, Pen 3.2, I wrote a book on the use of AI to solve Army problems. I took 100 problems that I've been working on for the last year. So from starting from August, I solved the problem. I saved the lesson, the prompt and the solution as a lesson. And that became lesson number 1, how to do this. And then I solved another problem and another problem, how to read a book, how to write a better paper, how to whatever. And so I just been accumulating these lessons, and I'm at lesson 105 right now. Every one of them I used Pen 3.0 or 3.2 to solve an applied problem. And it saved and it showed the prompt and the discussion and the dialogue. One of the lessons that I did was how to go from Pen 3 to Pen 3.2. How to improve the prompt itself was itself a project. So I have these 105 lessons in a book. I give that to all the students. But what I also did was I said, Pen 3.2, review all 105 lessons. Give me the first 10 lessons that a person should follow in order to learn to use you properly. So I have that. That's actually lesson 95, was to create the first 10 steps of using the pen. I also used it to do the project on the maxims for machinists. So I took my last 3 years of daily work, which is about of AI, without exaggeration, it is 1 million pages. 1 million pages of chat transcripts. I put that all in a folder and I said, go through there and find the 100 things that I failed on, but which I then fixed. And I don't make those mistakes anymore. And it found 100 failures, failure mode. Here's how that AI could fail if you used it wrong, but here's how you fix it. So that is a book called Maxims for Machinists. And the reasoning goes something like this. When you're in a machine shop, the first thing that the senior machinist says to the new machinist, he takes him over to a machine to do some work, and he says, before I teach you how to run the machine to make this part, I'm going to show you all the ways that machine will try to kill you. This is how the machine will kill you if you don't pay attention. Like, if you are wearing a ring and you're working on a machine and that ring gets caught, it'll rip your hand off or your finger, whichever comes first. If you have long hair and it's not in a net and it's just dangling and it gets caught in those gears, it's going to pull all your hair out if you're lucky, or it's going to pull your head into the vise and it'll crush your head, etc. So they teach you all the ways the machine will kill you before they teach you how to use the machine to put a 30-degree bend into a piece of pipe. That's called failure mode in effects analysis. That's how you keep people alive when you're using power tools. So I wrote a book called Maxims for Machinists, where I took the 100 failures where I misused AI. And I said, now here's how you prevent that from happening. Here is the prompt technique that you use so that instead of making a mistake, you do it correctly. I used Pen 3.0 to write that book. I used that book to improve Pen 3 to Pen 3.2. Pen 3.2 includes in the design all of those 100 failure modes. So it already knows that. So when you are talking to it and you say, I need a prompt that will help me do this job, it's not going to make those 100 mistakes. It's going to do the 100 things correctly. And it will give you a prompt that turns your description of what you want done into a really good prompt or a series of prompts. If it's like a multi-phase project, it'll break that into pieces and parts and work through phases with you. That's what Pen 3.2 does. That prompt is worth $50,000 minimum.
Quite a lot. But it seems like a great tool.
Yeah. So I'm going to send you Pen 3.2. I'm going to send you the Maxims for Machinists. So that's actually worth looking at because it will teach you internally how to think about AI, and it'll demystify AI. It's just a tool, but it'll teach you something important about how to think about AI as the human supervisor. You got to be the supervisor of that thing. And the problem is AI is so persuasive that you could end up, well, I'll just trust it because it's so smart. And that's mistake number one, is you listen to it for advice instead of using it to analyze information. That's mistake number one. It sounds like a person. It sounds like it's wise. It is not conscious. It is not an entity that has an embodied lived experience that has produced wisdom from trial and error. It is a probability machine trained on information, and it will reflect back to you like a mirror of your own making what you put in and how you asked it. So Pen 3.2 ensures that you ask it properly and that you retain command authority over the AI. I cannot stress how important that is. I can't overstress how important that is. I just stressed how important it is. Anyway,
Thank
that's
you.
that.
Thank
So
you
that's
very much.
coming to you. All
Last,
right.
last,
Yeah.
last thing, because I'm also trying to analyze my trades when I
Yeah.
close them down. And Alex was doing this 2T time frame.
Yep.
Should I record it in like any sheet? Because I
Yeah.
noticed like Alex had some
Yeah. In a
Excel.
spreadsheet. Yeah. In a spreadsheet. The format he has is the way to do it.
Okay. Is it possible, Alex, you can share this? I mean, not your trades.
Yeah. You have the Google Sheet, I think, on that, right, Alex?
Or I can, just
Yeah.
a table so I can reconstruct it.
No, share the Google Sheet. Now, here's the other thing I'm going to say. I'm going to send you I don't know if you saw the note on I created a Discord channel.
I haven't seen it yet.
I got a lot of stuff to send you today. So I created a Discord channel last week to make it easier for all the coaching students to collaborate with each other. So there's a place in there where I'm putting the AI, like I put the machinist's book and the Pen 3.2 in there. I just remember. So you need to have a. I got to send you the link so you can join the Discord server. There's a place that we're going to be storing the individual research that we do for day trading, swing trading, position trading, AI usage, collaboration between people. So I will send you a note explaining that later today.
Okay.
That's a
Okay.
good way to share files back and forth and read what the other guys are doing too.
Exactly. Thank you very
All
much,
right.
Ken.
All righty. She's calling me. I got to run. Last call. Anything else?
All right.
All
Thanks,
right,
Ken.
fellas.
Thank you, Ken.
Thanks.
Yep. Take good care.